Most insurance companies make use of TransUnion Auto Dealer's Guide in establishing the insured value. But as always, make sure you check and understand which guideline your underwriter is using. These guides used to be a little book containing all the vehicle values which was issued monthly. It has since gone digital and values are now extracted from a website with many insurers integrated into the system. So before we start unpacking the different types of value, where does these values come from? TransUnion receives over 40,000 vehicle returns monthly from dealer groups and vehicle manufacturers. The data is then analyzed and developed by an experienced team of independent specialist editors to ensure that the values are accurate in a constantly fluctuating market. In simple terms, dealers share with TransUnion what they bought and sold vehicles for the month prior, which is tallied and averaged out. Worthy note to the audience here, if you buy a car, is it well worth it to see whether it holds or depreciates in value? I have seen a couple of vehicle values dropping at astronomical rates due to there not being a second-hand market for these vehicles. Ultimately, a vehicle's value is based on demand. The less the demand, the faster the price will depreciate. On the upside of the coin, can you really get a vehicle with superior features at a steal of a price? But at least know the vehicle you purchase and ensure you make an informed decision. Let's unpack the different values you get on vehicles. Trade value is not a value you can generally insure the vehicle at. The trade value is the average price a dealer will offer you if you trade it in your vehicle today. Retail value, on the other hand, is the average price your dealer would sell you a vehicle for in any given month. Considering dealers buy at trade and sell at retail, is it self-explanatory that retail is much higher than trade? Otherwise, dealers wouldn't be in business, would they now? Market value is the average of trade and retail. Nominated values, to be frank, is always a headache. This is really only to be used for vintage and collector item vehicles. In order to insure a vehicle on nominated value, should you always have a valuation certificate from a reputable dealer. You also need to renew such valuation at least every year to ensure you correctly cover the asset. For all other vehicles, unless agreed to with your insurer, should there be a value in the TransUnion Auto Dealer's Guide, which is to be used. Trust me when I say insuring vehicles on nominated value, unless done correctly, always ends in frustration at claim stage. If you have a unique vehicle, then make sure you clearly disclose this at sales stage and request for confirmation of the same in writing. Most insurers today offer the insured the option of insuring his or her vehicle at either market or retail value. The premium difference in most instances are insignificant, so I would always recommend going with a retail value as to ensure the best settlement at claim stage. Watch our video on vehicle accessories to ensure that you are not shortchanged at claim stage. Also worthy to watch our video on credit shortfall if your vehicle is financed and only a couple of years old.